Good morning. I forgot to unmute myself. I apologise. Good morning. Good morning. Good morning. Here's Mr. Brown on the button as usual. Let's wait for him to get involved. Good morning, everyone. Morning, Straubs. Morning, Cam. Mr. Brown, you there? Come in. Over.
Good morning, Ryan. Good morning, everyone.
Good morning. Good morning. One sec. Let me just get the legals out of the way. As usual, nothing discussed on this spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trading as PIQ, or PIQ Suite, or its affiliates, including the hosts with the mosts, which is Mr. Brown and, of course, myself, Mr. Paisley. Good weekend?
Yes, not too bad at all, mate. Not too bad at all. Very wet, but yeah, it was.
Do you know
It
what?
was all right.
Do you know what? I was originally meant to be going to Lisbon this weekend, but that didn't materialise. I couldn't go there for certain reasons, and I instead went to sunny Wales with my good friend Paul, who is listening right now. Yeah, we did a bit of fishing, smoked some cigars, drank some champagne, and I actually got a bit of a tan in Wales in late September. Can you believe it?
Have you told everyone about your story of what is it, 15-year-old junior fly fishing champion or whatever?
No. It wasn't fly fishing. Fly fishing, I'm all for that, as I proved at the weekend. It was match fishing, and I was fourth in the country under 18s when I was 14. I will have you know. Anyway, we are digressing massively. So
And he could
what's
still
happened?
get in. He could still get into the
I know.
14-year-old competition now.
Mate, I'd probably still get into the clothes of my 14-year-old self, to be honest. But anyway, we digress massively. Go on, what's happened?
Oh dearie me!
Oh, God.
Right, let's look back to Friday first of all. It was a relatively quiet end to the week, actually, for most markets. It was more of a just sort of a directionless drift into the weekend, and as a result, the S&P 500 ended the day pretty much unchanged, and the foreign exchange market was also a little bit dull outside of the yen. Of course, the yen ending Friday around 2% firmer, with dollar yen trading down to a low at the 142 figure. Of course, we did have some yen weakness that came in, pushing dollar yen as high as 146 before the results of the LDP leadership contest were announced, which in turn created a bout of yen strength, and also some significant weakness in the Nikkei, which has continued this morning.
So just on that, because everyone, I think people need to realise that basically the Nikkei right now is trading just as a proxy for the yen, right?
Oh, 100%, yeah.
But there's still people, so there's people saying, they're looking at the Nikkei saying, the Nikkei's collapsed. It's, this is Japan's economy's fucked. It's not. It's just because the yen's strengthened. It's like,
Yeah, and also there is like absolutely no read across to any other equity market. The Nikkei future is down 5%, and the S&P is unchanged. So
it's purely a result of the Nikkei. Sorry, of the yen.
Of the yen, yeah, it's literally just a currency play. But besides the yen, everything else in G10 was pretty subdued on Friday. We did see treasuries rallying across the curve. The 2-year down by 7 basis points, testing the year-to-date lows around 3.55%. The curve flattening it just a little bit. Gold was a touch softer, snapping a 6-day winning streak, which I guess is notable given how gold has become a little bit of a momentum play recently. Down by about 0.5% on Friday. Oh, Jesus Christ. And crude was a little bit firmer, trading up to $68 a barrel. In terms of catalysts, both data and news flow were relatively light as last week drew to a close, although we obviously have had some more geopolitical goings on over the weekend, which I'm sure Ryan will get into in a moment, because to be completely honest, I can't be bothered. In terms of data, well, yeah, exactly. In terms of data on Friday, Canadian GDP was a little bit better than expected. The economy growing by 0.2% on the month in July compared to the stagnation that we saw in June. We also had the core PCE price index out of the US, obviously the Fed's preferred inflation gauge. A little bit of a mixed bag. Core PC rising by 0.1% on a monthly basis, a little bit cooler than the 0.2% that we saw in July. On an annual basis, though, core PCE rising 2.7%, a little bit quicker than the 2.6% that we saw in July. But to be completely honest with you, it doesn't really matter. The Fed have told us, both in their rhetoric and in their actions, by delivering a 50 basis point cut, that they have sufficient confidence in inflation getting back towards target. So it is incoming labour market data that is by far and away much more important in determining the policy outlook going forwards. And just on that, we did have a couple of Fed speakers on Friday. I think the St. Louis Fed President Musalem, he is a non-voter, but I think his remarks were probably of most interest. He was talking about how the Fed should cut gradually, and I quote here, the economy could react very vigorously to looser financial conditions, potentially prolonging our mission to return inflation to 2%. And I think that's an interesting comment because particularly in the bond market recently, this curve steepening that we've seen is perhaps a sign of the market becoming a little bit concerned that the Fed might well be doing too much in easing into an economy that remains pretty resilient. And I think it's interesting that we've heard Fed officials begin to perhaps raise concern over the same issue. We'll see whether that becomes a little bit of a theme because we've got plenty more Fed speakers coming up this week as well. But
Joy.
that well, exactly. But that is pretty much it from me this morning. But Ryan, I'm sure you've got plenty
Yes, I
to
have,
opine
and
on.
I'm gonna try and add some like spark back into the recording because you seem a bit grumpy, mate. Everything all right? Anything you want to talk about?
No, no. Well, I didn't have a coffee. I haven't had a coffee this morning, and
Oh, that'd
I
be
got
it. That'd be it. I could tell
absolutely
there was something. Yeah. Do
bloody
you
soaked on my
want
way to work. So
to? Oh, there we go. This is all it is. Talk about it. Anyway, all right. Okay. Moving on before I start singing
was that
again
meant to
because I'll.
cheer me up?
Yeah, exactly. I think you've not had a coffee. I've had too many. So between us, we've done all right.
Yeah.
Anyway, what was I doing? Oh yeah, News Squawk. Some headlines via our friends at News Squawk. I'm going to start off rather than the Middle East this time. I'm going to start off with commodities. Obviously, crude futures mildly underpinned amid the heightened geopolitical tensions after Israel strikes on Beirut, which killed the Hezbollah leader Nasrallah, while also widened its assault on Iran-backed militants and struck targets in Yemen. We've also had copper futures have been underpinned and iron ore futures both in China and Singapore saw early double-digit gains after China's continued support efforts and easing of home buying restrictions by key cities over the weekend. Speaking of
Uh,
China, gone.
oh, sorry. I was just I find that rally in iron ore a little bit peculiar, given that
Irons.
we. Oh God, you're normally Millwall with your attire.
No.
Um, what was I going with that? Yeah,
I don't know,
given
mate.
that the well, no, given that the real world impact of that stimulus that they delivered last week is likely to be absolutely tiny, I find it odd that iron ore would be up. What did you say? 5%, 8%, something like that.
Double digits I've got on here.
Oh, it's
Well,
double
that's
digits now, is it?
apparently.
I find that a bit
Apparently.
strange. I think that's a bit of a buy the rumor, sell the fact trade, probably one to
Well,
fade.
also, I can't imagine, don't get me wrong, I've not looked at an iron ore ladder forever, possibly. I can't imagine it's the most liquid of markets. So, that could also be a factor, maybe. I don't know. I'm guessing. I'm completely clutching here, so don't shout at me if I'm wrong. Anyway, China. So PBOC said it must focus on expanding domestic demand, boosting confidence and promoting a sustained recovery in the economy. They also went on to say that commercial banks must in batches lower interest rates on all existing mortgages by October 31st to no less than 30 basis points below the PBOC's loan prime rate. So if anyone out there happens to have a mortgage in China, congratulations to you. China's China's
Funnily
MOFCOM said
enough,
it.
I don't think
Yeah,
we've got many people listening who have a mortgage in China.
possibly many people in China.
Well,
Said it. So what was I going to say? Oh, China's MOFCOM said it will further improve policy targetedness and effectiveness, as well as improve consumption structure and focus on fostering real consumption of businesses. Um, as Reuters notes, the Chinese stock market has been on an absolute tear since Beijing started rolling out these flurry of stimulus measures last week and over the weekend. It's jolted the beaten down market to revive a slowing economy. We'll see how long that lasts. But case in point, today, the CSI 300 blue chip index surged 8% to its highest level in over a year after clocking its best weekly performance in nearly 16 years last week. So that's the China update for you. But on geopolitics, obviously, we now fly over to the Middle East, where Israel has carried out strikes on Lebanon's capital, Beirut, on Friday, targeted the headquarters of Hezbollah, which killed as we said, the Hezbollah leader, Nasrallah. Israeli The Walla website reports that Israel forces are concentrated on the northern front and preparing for a ground invasion into Lebanon, so one to watch. Obviously, when things like this happen, the Iranians get a bit vocal, and as such, we have comments from Iran's president saying that Lebanese fighters should not be left alone, so that Israel does not attack countries on the axis of resistance one after another. The Iranian foreign minister said the killing of the IRGC deputy commander in Lebanon will not go unanswered. And staying in the Middle East, but the US is to reinforce its defensive air support capabilities in the coming days in the Middle East, and Defense Secretary Austin has put other US forces on a heightened readiness to deploy. Meanwhile, Russian PM will visit Iran on Monday, today, and will meet with the Iranian president, so see what goes on there. In Europe, we've had the far right. Don't shout at me for saying if you don't believe they're far right. I'm just reading a headline from Reuters. The far right Freedom Party of Austria was projected to be first in the Austrian parliamentary election with 29.3% of the vote, while the ruling Conservatives are seen at 25.3%, Social Democrats at 20%. From what I gather, there's going to be a fair amount of horse trading needed for the Freedom Party to gain power, but they seem keen to form a government. ECB's Stoneras said that based on the most recent data for inflation and the real economy, he finds it reasonable to proceed with a 25 basis point cut in October, or risk inflation falling below targets. Oh, remember when the only concern was inflation above targets? Oh, halcyon days. Couple of headlines before I go back to Michael from PIQ Suite and Reuters. Quick little plug. Remember, our prices are going up this week or maybe next week. So if you use the code BLAST, not only will you get a year's free, but you'll be locked in at the current rate should in a year's time you decide to start paying. So it's going up from £10 a month to £30 a month, and we've got a load of stuff coming. It's very exciting times. But anyway, I digress. Japan's incoming Prime Minister, Ishiba, said on Monday he will call a general election for the October 27th following his victory in one of the closest ever leadership races in the ruling Liberal Democratic Party. On the back of this, as we said before, Nikkei has fallen because the yen is strengthened. And a quick update on the US port strikes, because as always, I am not sure that, I'm in disbelief basically that how little media attention this is getting. So the update on this, so for those, I'm sure everyone's aware, but for those that aren't, we're seeing potentially, with a high likelihood, it seems at the moment that all of the major East Coast containerized ports and in the Gulf of Mexico will be going on strike on the morning of the 1st of October. There could even be some sympathy strikes on the West Coast, which would basically cripple the US containerized import-export. And the latest on this is that the International Longshoremen's Association, which sounds very Sopranos-esque, along with tens of thousands of dock workers and maritime workers around the world, will hit the picket lines on Tuesday and strike at all Atlantic and Gulf Coast ports from Maine to Texas. And the union is demanding higher wages and a total ban on automation at ports regarding cranes, gates, and moving containers in loading and unloading of freight. There was no negotiations on Sunday, and there are none planned before midnight tonight's midnight deadline. So yeah, we could be seeing some trouble there, and I guess that as soon as this does happen, everyone will claim to have had it on their radar from the get-go. Why is Michael, are you there? Because it says you're requesting again. Hang on, one second, invite co-host. And finally, just a bit of a stat for you, that 3/4 of US banana imports, significant portion of meat exports, could face delays on the back of this. Why has Michael Brown disappeared? Oh no, it's just me. Send co-host invite. Michael, are you there? Come on, Michael, what is going on? He might not be there. It might just be me. Hang on, I'll give him a couple of seconds. Let me see what's going on. Oh, he's back. Come on, connecting. Hello, you there?
Oh, I am. Yeah, sorry, I muted myself while you were talking. I had to cough, and somehow ended up leaving, so I had to come back.
Classic Michael Brown.
Oh, yeah, technology and me. A couple of things on what you were saying, because I didn't have the opportunity to interject. Because, well,
Oh, good.
I tried, but it turned out I was talking to myself. The main one was the LDP, the Japan election.
Yeah.
It's pretty much guaranteed the LDP will win that. They've been in
Oh, yeah.
power in Japan forever. But the one thing it does mean is that it's almost certain that the BOJ, they will now be on hold at their October meeting, because I think that comes a couple of days before or a couple of days after that penciled in election date. So just bear in mind
Also, I
that if
suppose worth remembering on the back of that Shiba is seen as a monetary policy hawk. That was a hawk, by the way.
have you got a dove noise as well?
Power of the crow. Anyway, right. What's happening today and this week? Then quick, come on, let's go.
Jesus
Oh God, I'm
Christ.
gonna shoot myself.
Blimey. Right. In terms of today, then, it's a very busy data docket for the rest of the week, but today is relatively light. We do have some inflation figures due from Germany this afternoon, though. Headline CPI expected at 1.7% in September on an annual basis. That will be down from the 1.9% that we saw in August, and of course, after the lower than expected figures from France and from Spain towards the back end of last week, expectations are probably towards a cooler than expected number out of Germany later on today. We also have remarks due from Fed Chair Powell and ECB President Lagarde as the day progresses. Into the rest of the week then, we've got some final PMI figures due tomorrow from the Eurozone and from the UK. These both expected unrevised. So the manufacturing sector in the Eurozone expected to have continued to shrink at its fastest pace in 9 months. More importantly than that, though, we have the latest inflation figures from the Eurozone. Headline CPI, that is expected to fall to 2% from a prior 2.2%, but core inflation, that's expected to tick higher to 3% from a prior 2.8%. Coming into the release, markets price around an 80% chance that the ECB deliver a rate cut at the October meeting. If we get a headline number in line with or below 2%, then you would expect that 25 bip cut in October to become pretty much a certainty. Stateside tomorrow, we have the latest job openings figures. This, of course, the JOLTS survey. That's expected to tick higher to 7.693 million in August. And we also have the latest ISM manufacturing PMI. That's expected to show a modestly slower pace of contraction at 47.6. Into Wednesday, the data docket is a little bit quieter, with only the ADP employment figures of note. And of course, they bear little to no resemblance to the official jobs number that we get out on Friday lunchtime. Despite the quiet data docket, though, we do have 4 Fed speakers and 8 ECB speakers to get our teeth into as we move through Wednesday. Thursday is the busiest day of the week. In terms of releases, a whole host of services PMI figures from across the globe. We also have inflation due from Switzerland, of course, after the Swiss National 25 basis point cut last week. The weekly initial jobless claims figures from the United States, although those figures do not coincide with the non-farm payrolls survey week. And we also have the latest services PMI data from the United States. The ISM gauge expected at 51.5 in September, unchanged from the August reading. And then, of course, as the week draws to a close on Friday, it is jobs day with the latest US labour market report due. Headline non-farm payrolls, that's seen rising by 140,000 in September, with unemployment expected to hold steady at 4.2%, while average hourly earnings are seen cooling a touch to 0.3% for a prior 0.4%. Of course, the Fed's 2024 and 2025 unemployment forecasts are at 4.4%. So if we were to see any further labour market softness, then that would lead the market to quite aggressively price in another 50 basis point cut at the November meeting, although the market is roughly 50-50 on that prospect for now. So another intriguing week awaits, and of course we have plenty of geopolitical nonsense going on, as well as all the data and speakers that we've just gone through.
Well, thank you very much for that, Mr. Brown. And hopefully tomorrow have some coffee before we get on, and hopefully you stay dry. Just
Fingers
hopefully,
crossed.
fingers crossed. And yes, so listeners, thank you very much for listening. I will leave you with some sage advice from my dear friend Paul. you know, it's more life advice, but it's definitely applicable to trading. Is always remember to factor in the fuckery with whatever you're doing. I quite like that one. So that's from Paul. And anyway, we will see you all tomorrow. Now you've got to wait for the awkward silence after me and Michael say goodbye, so we don't cut each other up. Cheers, buddy. Bye
Bye
bye.
bye.
5, 4.